What is going on, Lucid fans? Welcome back to Financial Journey. So today I want to give you a good breakdown of everything that you need to know from the market and why I feel personally it's a little bit more of an overreaction. And not only that, I want to talk on as far as the Lucid curse and what that potentially means. But before I get into any of that, making sure you guys hit that thumbs up and subscribe. I greatly appreciate that. With that though, let's get right to it. So the market is tentatively closed right now, but you can see the ticker still going after hours right now. It did close down roughly about 4.7%, 11.5 million for volume, 23.1 is the average, and that is a 6-month average, and 1.1 million shares being purchased by institutions just today alone, and that is on the secondary market. So overall, it is what it is. There's a lot of fear out there brought on because of technically a recession. A lot of people are saying that it's going to be brought on by the Feds, and we do have the Fed meeting coming up on the 27th, so that's something that you need to keep in mind. A little bit more fluctuations as far as the estimates. A lot of people are saying it's going to be 75 basis points, but regardless of all that, as soon as they technically said that they're going to be doing 150 basis points over the next 2 meetings, I personally feel that it's already been factored in. So that's going to aid into where I kind of elaborate on why I feel this is just going to be a little bit more of a overreaction what's happening and why it might be a great time to buy in. Keep in mind, I'm not a financial advisor, so do your own due diligence at the end of the day. But when it comes down to it though, I think that there's some things that you cannot ignore. So for every one actual article saying that there's going to be a massive recession, that we're all going to go into the dark ages once again, there's a lot of other articles that are basically contradicting that, saying that hypothetically a little bit of a pullback that did happen is making a lot of these growth plays very actual advantageous to get in, and that most of them are actually at their intrinsic value. So you're getting a lot of inconsistent information, and if you do actually deep down read a lot of these recession articles, they all link it to actual inflation. And hypothetically, the next CPI data is coming out on August the 10th, I believe, so that might be something just to watch for. But generally speaking, I do personally feel it is very much peaked, especially as well the Feds are going to factor in what is coming out on this coming Friday as well. So that technically is the PCE numbers. That's actually what they truly look at for actual inflation. Technically, the media likes to look at CPI data, which includes a very high dependency on energy, and we all know ever since Russia, that whole situation started to happen, oil just went massively up. So a little bit more of a benefit for EVs lately, but still, it is what it is. I personally feel that there won't be any recession. There possibly might be one in 2023 or possibly 2024, but still, at the end of the day, you cannot ignore the fact about institutional purchasing behind the scenes. So this is all the dark pool purchases just from today alone, just for Lucid, and it is, again, similar to any other day, very, very significant. So a lot more buying going behind the scenes, and these are pretty extensive actual purchases, even as little as 100,000. So clearly a lot of big money continues to buy in. And not only that though, I like to use short interest as a very good benchmark. So giving you an update on this, they actually closed out 1.37%, so 1.7 million shares were returned today. Typically, if there was a massive recession on the brink of destruction right now, then you'd see a lot more shorts increasing their position. On the contrary though, they're actually decreasing. So take that how you see that. I personally see that as a very bullish sign, and this is why I like to read all the data points behind the fact, especially like I said, why would institutions be buying on the rate that they are if we were on a brink of a recession? So this is how I see things. But at the end of the day, you cannot ignore the fact about Lucid and its curse. And what I mean by that is Lucid is technically, I don't know if it's just not able to or whatever it is, it cannot do 5 consecutive green days, no matter what comes out, unfortunately. So just wanted to break this down. This is all the historical data. And last time we actually did do 5 consecutive days was actually at the beginning of November, tail end of October, early November. So it's very, very interesting the fact that we have had so much momentum, even more so last week and the week before and things like that, and we just cannot do 5 consecutive days. So that is a little bit more of a curse. I personally feel the next time we go on a rally and we do get 5 consecutive days, that is going to mean a epic rally is on its way. My own 2 cents. Again, this is just for entertainment purposes, and at the end, I hope you are entertained by this. But overall, looking at the technicals, we are definitely not down and out, still above the 50-day moving average. average. We do have a little bit more of a deviation right now, so red line above the black showing a little bit more of a bearish sentiment, and we are still actually at 80, which does signify that we are a little bit more overbought still despite the pullback. Momentum, number of buyers have definitely been going down as well. RSI is also at 48, a little bit more neutral, but on the actual chart, like I said, over the last couple of days we did break below that 100-day moving average and central Bollinger Band and officially bounced off of that 50-day moving average. So overall, looking on the micro and macro views, pivot point of 1767, so that is a point to watch for over the coming days. And as far as resistance and support points, first, second, and third, they are very, for the most part, very tight knit. So that's something as well we need to keep in mind, that we do need a very good pizza catalyst to get past that. And we do have a lot of them coming up, whether it be the Feds, a lot of earnings this week as well. And going into next week, we do have our own earnings. So there's a lot of good catalysts that could potentially come out and get us past and over this $22, $23 mark. On the contrary, like I've even said over the last couple of videos, we do have a very wide gap here. So potentially we could gap down. This is where it's aiding in a lot of volatility this week, and this is why I did do my video yesterday saying that we are going to have a lot of volatility this week. So make sure you do subscribe and stay tuned. I do daily videos on Lucid. But as far as the support points, first, second, and third, so 19, 1831, and 1709. Keep in mind, like I said, 1767 is the actual pivot point. So if we do break below that, then potentially we should be on a little bit more of a downtrend. But given the circumstances today, we did break below that first support point. Hopefully it does hold as far as the second one, but like I said, all the data points behind the scenes are all insinuating that this is still a great buying opportunity. I mostly feel that it's just the technicals that are a little bit more overbought that's causing us to go down, and unfortunately when we go down a little bit, you get a lot more chatter about recession. So a little bit more BS, but that's how the media does like to kind of cause a lot of FUD and twist things. So let me know your thoughts on all that in the comments below. If you haven't already, hit that thumbs up and subscribe. I greatly appreciate that. And if you do like my channel and want to support the growth, take a look at my memberships, link in the description below, or just hit the join button at the bottom of the screen. With that said, appreciate you guys watching, and let's all make a lot of money on Lucid.